Hi, I'm Zoe Bollinger. I'm here with John Bollinger to have a little chat as part of MetaStock's Secrets of Successful Traders project. John has a lot of years as a successful trader, so he's going to tell us a little bit about his work on Bollinger Bands and some general thoughts, ideas, wisdom about the markets and trading. That hopefully, I'll help you on your way. Bye, John.
Hi, Zoe. How are you?
Good. Can't complain. Do you want to just start with a little bit of a quick intro to the Bollinger Bands, little how you develop them, the basics of how we can use them?
So, Bollinger Bands are a type of trading band, which means that there are lines that we draw on the chart that define high and low on a relative basis. There's an upper band that defines relatively high, a lower band that defines relatively low, and a middle band that is sort of a trend indicator. Um, I developed Bollinger Bands because in the bad old days when we were doing charts by hand, we used fixed width trading bands, um, and they needed to be changed over time. It was hard to change them because it meant you had to draw a new chart. And B, when you drew that new chart, if you were bullish, you kind of drew it so painted a bullish picture. If you were bearish, it drew it so it painted a bearish picture, which meant you were letting your emotions into the game. So I wanted some mechanism that would set the width of the bands automatically, take us out of setting these definitions of relatively high and low. At the time, I was an option trader, and one day I realized that volatility might be a good tool to do that. And a few days later, I had come up with Bollinger Bands. I point out that they are formulated today exactly as they were 40 years ago when I created them. And that's because they reflect a first principle of the market volatility that has not changed over time.
And when you look at a chart with Bollinger Bands on it, does it give continuous advice? Is it always telling you something? Or are there specific conditions where it tells you something?
So this is the thing that people really don't understand. Um, it does Bollinger Bands or any trading bands for that matter do not give continuous advice. The odd thing is that the very first types of trading bands that we know about in the commodity world were in fact a system that did give continuous advice. That is, it was always in the market system. But today's trading bands, as we use them, don't give continuous advice. They help you find setups on the chart where the odds of success are in your favor and the amount you must risk is less than the potential gain. Those are the two biggest dynamics for governing overall trading success over time.
And I think one of the most common questions that we hear about the bands are, as price moves around between and up to or down to one of the bands, what does the touch of the band mean? Is it inherently a reversal signal? Are there other interpretations?
Well, unfortunately, it's not a reversal signal. A lot of people believe this and they try to use this and they try to use that idea. And when they price tags the upper band, they automatically sell, or when it tags the lower band, they automatically buy. They very quickly find out that that doesn't work. A tag of the band is not in and of itself a signal. It can be a signal if you bring other things to the party. And typically those will be other technical indicators, say like a volume indicator or accumulation distribution indicator. Even a momentum indicator can be useful in that regard. Or another thing that's very, very useful is to use Bollinger Bands to help identify patterns, such as W bottoms and M tops.
You jumped a little bit onto my next question already when you mentioned indicators. Getting ahead of yourself. Are there a couple of indicators? I know you have percent B and bandwidth, and maybe you'll tell us a little bit about those. And then are there some additional indicators beyond those that you like to use with Bollinger Bands?
So we should start with percent B and bandwidth because those are the essential Bollinger Band indicators. Percent B tells us where we are in relation to the Bollinger Bands. It's a formula that yields one when prices at the upper band, zero when prices at the lower band. 0.5 when price is at the middle band. If we're outside of the upper band, it would be a number larger than 1. If we're outside of the lower band, it would be a number less than 1. Um, it's the same sort of scaling as we get for indicators like stochastics. So, and that's very, very helpful, especially with pattern recognition and systems trading. So, one of the earliest systems that I ever used was a system that used trading bands on the Dow Jones Industrial Average. And we got, say, 4.5% above the average, and one of two indicators was negative, we would take that as a sell alert. And this is a very important point. And likewise, if we got to the lower band, price got to the lower band, 4.5% below the 21-day moving average, what we used in those days, then and one of those two indicators was positive, that would be a buy alert. We say alert because we wait for the market to confirm our opinion. Actually, in this office, we just had a situation like that this morning where we were looking at a specific security that we wanted to purchase, but we wanted the price to develop a little bit more to confirm our opinion before we did so. So that's very typical of our practice. So confirmation is really, really an important part of the puzzle.
And it's something I hear you talk a lot about, whether it's a W bottom, a two bar reversal, a squeeze, any of the classic Bollinger Band patterns, is the pattern itself is all well and good, but waiting for that confirmation bar to kind of show you and confirm that price is going to move the way that the pattern anticipates.
Yeah, it's essential. It just we talked a little bit before about those two variables, the number of winners versus the number of losers, and the size of the winners versus the size of the losers. By waiting for confirmation, you can improve both of those variables, and combine those variables can have dramatic impact on your profit and loss. By the way, I skipped one of the indicators. We talked about percent B, but we didn't talk about bandwidth. You just hinted at it with the squeeze. Bandwidth tells us how wide the bands are. It's simply the distance from the upper band to the lower band, normalized by dividing by the middle band. When bands are very, very tight, this is typically an area in which trends are born. And when bands are very, very wide, this is typically an area in which trends end. I have a little snappy thing, we call the situation where the bands are very, very tight a squeeze, and the situation where they're very, very wide a bulge. We say squeeze is where trends are born, and a bulge is where trends go to die. In fact, one of the great indicators of not only Bollinger Bands, but some other kinds of trading bands as well, is if you're in a big up move, and the width of the band starts to narrow, that's an indication usually of at least a consolidation and sometimes a reversal in price.
That makes sense. Beyond percent B and bandwidth, are there other indicators that you like to use with Bollinger Bands? And how do you choose which indicators to add so that you're not getting things that are multiple indicators all based on the same information, telling you the same things?
Well, the first indicator I ever used in an article was the relative strength index, Wells Wilder's relative strength index. We compared it to the price action of Bollinger Bands, and that ultimately led to the Bollinger Band trading system, which is now available on MetaStock. It's interesting that that system was developed so long ago and it's still working. It's an example of what happens when you work with first principles. So that's been very gratifying to watch over the years. Other indicators that I like the entire volume complex of volume indicators. For example, we're all familiar with RSI, the relative strength index from Wells Wilder, but there's a variant of it that involves volume called the money flow index, MFI, and this displays some supply demand characteristics. So the entire group of indicators that look at things like accumulation and distribution, supply and demand, those are extremely useful with trading bands. So the obvious ones that everybody knows are accumulation, distribution, and on-balance volume. There's an additional one that I like a lot. It's called intraday intensity. written by David Bastian a long time ago, and it tries to track the actions of institutional traders.
And in the middle of your answer there, you threw out quickly a reference to the idea of first principles, something that you talk a lot about. Maybe you'll take a second and explain that.
So first principles are the basic market mechanisms that have been with us for all time. Some of our earliest records of market making and active markets go all the way back to Babylonian times. People have been buying and selling stuff in marketplaces forever. And there are certain things that are essential characteristics of marketplaces, and I call those first principles. Um, uh, for example, Bollinger Bands are driven by a first principle, and that's volatility. Um, there are many others. The way you can kind of tell with an indicator is, if you see an indicator come along and people start to pick it up and use it, and it gets a lot of publicity and stuff like that, and then 3 months later you don't hear anything about it anymore, the odds are that it wasn't based on a first principle, because it was probably curve fit or over optimized, something along those lines. Um, it's pretty easy to see the ones that have stood the test of time and then dive in. We talked a little bit about RSI before. That examines the momentum on up moves versus down moves. So very basic market dynamic. That's been with us as long as as charts have been printed, basically. Um, so yeah, I think it's pretty easy for people to figure out what first principles are when they see them. It may be hard to list them off the top of their head, but when you see an indicator that's working properly and it's worked properly for a long time, you can, kind of examine it and try to figure out what first principle is behind it.
Makes sense. Let's chat about time frames a little bit. What time
Hmm.
frame do you tend to trade in? And then is there a right time frame for Bollinger Bands? Can you use them in different time frames? What are the options?
So I came from the dark old days when trading costs were really, really high and taxes were really, really high. So short-term trading was just out of the question. You just couldn't do it. Um, all you did was pay the brokers and the market makers and the tax collectors. Um, and you were lucky, really lucky if you had anything left afterwards. So we learned to trade using daily, weekly, and monthly charts, and we called ourselves swing traders because we traded not in today's sense of swing traders, but in the sense back then, we tried to get those big moves in stocks that ran 10, 20, 30, 40% or more, hopefully, and would last, weeks or months. But back in those days, if you got a trade that lasted more than 6 months, it was a real tax advantage. So that was the environment I came up with in. And that's the way I learned how to trade, and it's still my favorite approach. Um, but Bollinger Bands are agnostic to taxes and market makers and commissions and such like that, so they can be applied in any time frame you like. As long as the stock is sufficiently liquid, you take a super liquid stock like Microsoft or Google or one of these hyperactive stocks, NVIDIA, and you could probably apply Bollinger Bands to tick charts. It'd be a real mess and impossible to follow. But there's for something like that, there's no downside limit. But for other stocks, there has to be enough liquidity in each bar for you to see the price formation mechanism at work. So, each bar needs to be distinct from the last one and have a distinct open, high, low, and close. You don't want bars that close all at the same price for 3 or 4 bars or something like that, or trade in a tiny little narrow range. You want bars that actually you can, as I said, see that price formation mechanism at work. So For most stocks, minute bars these days are achievable. For less liquid stocks, it may be 10-minute or half hour or hour bars are as low as you get. I suppose there are probably stocks for which even daily bars would be a tough read, but we don't pay any attention to those. Those stocks aren't liquid enough for our purposes here at Bollinger Capital. So you see the range. I've seen Bollinger Bands used on quarterly economic data. So there you go, from seconds to quarters. It's really up to you. And again, really the only limiting factor is that there be enough information in each period so that it makes sense what you're doing.
You mentioned economic data there, which is further out of field, but are there particular markets that you can use Bollinger Bands for, or can they be used broadly?
They can be used broadly. In the past few years, we've seen that they were particularly applicable in crypto markets. Um, I think that was at the time a reflection of the lack of professional participation. There wasn't a lot of arbitrage. There weren't a lot of robots in their trading and such like that. That's not true anymore, but yet they still seem to offer an extra advantage in the crypto markets. It's also true for technical analysis in general, not just Bollinger Bands. It Another aspect of that is Bollinger Bands and all these technical analysis tools work better in smaller markets than in larger markets. And again, I think that's a function of professional participation, how much arbitrage is going on, how much electronic making is going on, how much scalping is going on. All those things simply add noise to those markets and make it much harder to interpret the signals generated by technical tools. So, specialized markets like crypto, smaller markets offer a great advantage. And one of the classic markets for all kinds of trading bands, Bollinger Bands included, are the forex markets, where they are absolutely beloved.
Moving away from Bollinger Bands in general, do you have one piece of advice for new traders, for people getting started in the industry? Something they should do and maybe something they shouldn't?
Okay, first of all, I think they should go out and read the classics, the classic literature of technical analysis. It's really important because, many of the things that, classic market technicians like Garfield Drew and Richard D. Wyckoff and many of the other, Robert Ray and many of the others, Hamilton, and such. The issues that they dealt with are the same issues that we deal with today. And they wrote beautifully and very clearly about them. And I think there's a lot people could learn by going out and reading the classics. The things that they shouldn't do. They shouldn't go into these chat rooms and, with people telling them what to do. That's just not going to work out well. Um, those people that are there are trying to get paid to tell you what to do, not based on the success of what they're telling you what to do. So I think that's really important. It's really important to find your own way to find out what you like and what you're comfortable with, what your risk reward parameters are. Start small, scale up as you go along and gain confidence and experience. And whatever you do, stay away from leverage as much as you can. Leverage truly is the killer. Professionals, learn how to use and manage leverage, and can be a very important part of their trading process. But for somebody coming up the ropes, all leverage can do is wreck you.
Yeah, that's a point you definitely made to me a few times, that position size so that you can always come back tomorrow no matter what happens.
Yeah, it's an essential concept. It's a privilege to be in this business and to get to do what we do on a daily basis. So you never ever want to do something to prevent you from coming back tomorrow. And the number one roadblock there is too much leverage.
Well, I think that's probably a good takeaway. So maybe we'll leave it there. I'm sure the rest of MetaStock's Secrets of Successful Traders will have other wisdom for you. And if you want to know more about Bollinger Bands, particularly some of what we touched on is covered, and then there's a lot more on BollingerBands.com. There's specifically a set of 22 rules for using Bollinger Bands. We touched on some pieces of them here, but there's some more insight there as well.
I should point out also that I've been a MetaStock user since the beginning, literally since the beginning. Um, and we've developed a couple of MetaStock products that are pretty terrific. There's a Bollinger Band toolkit for MetaStock, and there is a Bollinger Band system that screens opportunities in individual stocks, also available for MetaStock. So those are both pretty terrific items that you could explore.
Well, we'll leave you there. We'll say thank you and good trading.
Ah, good trading.